So if you had the choice between financing and paying cash, what would you choose? Golly, this thing is dirty. Do you pay cash or do you finance? So this is a topic of conversation that pops up from time to time, and usually it's spurred on by some ignorant comment about a person or from a person who's saying how cool they are because they paid cash for a $40,000 Q50. And we'll keep this conversation in Q50 terms because most of you are here for Q50 content, but this principle can be applied across all vehicle platforms to a point. Keep things in perspective. Let's just talk any vehicle over $15,000. Now, there's varying opinions on the matter, and there are pros and cons to both, of course. So let's just go over a couple of them, and then I'll give you my opinion, which of course is truth. Now, people that talk about paying cash can certainly make some valid arguments. What are they? Well, you don't have debt hanging out over your head. You don't owe anyone anything on a monthly or a regular basis. There's benefits to that. Certainly. Of course, you're not hit with the overall financing, the accrued interest over the period of your loan. Of course, you can jump on Facebook and flex on those people who financed. Okay, now what are the benefits to financing? Well, in recent years, interest rates have been quite low, so money is cheap, as they say. You pay a small amount of accrued interest over the life of the loan in order to keep your payments on a monthly basis low. Through financing a vehicle, you're also able to build and maintain your credit, which is very, very important. I spent some time as a sales and finance manager at a car dealership, and I found in my time in that seat that it was easier to get a person with poor credit financed than it was to get a person with no credit financed. More often than not, banks are willing to give a person a second chance than they are willing to give a person a first chance, which is sort of unfortunate. Now, there's a bigger point to be made here, but let's just get to my overall opinion, which again is truth. Here's the reality of the situation, guys. Unless you are a multi-millionaire, paying cash for a vehicle is stupid. Don't get your panties all in a wad here. Hear me out. This wasn't intended to be an insult. I might have been a little aggressive. Okay, you're not stupid. You're an idiot. But just think about this. If we're talking a Q50, Q60 that it's a couple years old or even brand new, we're talking $30,000, $40,000, $50,000 for a vehicle. That's a big chunk of change for a vast majority of people out there with, a house and kids and multiple cars and obligations. Unless you're very, very well off and you have multiple sources of income or a lot of disposable income, 50 grand's that's a lot of money just to drop on a vehicle. But that's just one small part of the argument. My main point would be that when money is so cheap, in that interest rates are so low, new vehicles, there's opportunities out there for 0% interest, 0.9% interest. But hell, if it's 2, 3, even 4% interest rates on a loan of $40,000, $50,000, over the course of that loan, that amount of money is really not all that much in order to save liquid cash available for you to do as you please. So my argument would be that with money being so cheap, I don't care how much money you have in the bank, paying cash for a car, a depreciating liability, a vehicle is not an asset. It is losing value immediately as soon as you drive that thing off the lot. If you are paying cash, you are making a mistake. Yes, we know today's market is a little bit different than normal, but in general, just for example, I paid $19,995 for my Q50 3.5, almost 4 years ago at this point. Carvana offered me $21,500. After 35,000 miles and 3.5 years of ownership, they're offering me more money than I paid for this car. But in general, vehicles, in normal circumstances, vehicles will automatically depreciate. It's just the nature of the beast. Unless it's got some collectible value to it, like a GT3 RS or something crazy like that. A car is not an investment. Well, let's just put it like that. A car is not an investment. So if you're like me, for example, I never own vehicles 3 or 4 years. This is the longest I've ever owned a vehicle, almost 4 years with this Q50. So the amount of interest that I would pay at the end of a loan is very, very slim because, first of all, I'll never reach the end of the loan. If I, push it out to 4, 5, or 6 years, 72 months, 80 months, whatever the case may be, I'm going to only get 24 months into it. So the amount of interest that I will have paid is very little. So for me to drop cash on a car and pay for it outright, to immediately lose 10, 12, 15, 20% of the value over those 2 years, it doesn't make any sense. I'm losing more money than I would have put into it paying interest. That's just, you're an idiot. It's just common sense. But even still, think about this. A brand new Q50, $55,000, we'll say, $50,000, keep the number round. You buy it from a dealership, they get you a great interest rate, 1%, 2%, like I said, even 5%. Over the life of the loan, the amount of interest that you will pay, I don't even know, $4,000, $5,000, $6,000 over a 7-year period. That's worth it, considering the fact that through that 7-year period, you will have that $50,000 available in your bank account in the event of an emergency, for example. What if you get injured on the job or something or injured in general? Some of your things aren't covered through insurance. You don't get workman's comp. You're not able to pay your bills. You got $50,000 cash available for you. What if your air conditioning goes out, not covered by home warranty? What if your heater goes out? What if you have a flood that's not covered under insurance? You need that cash available. But no, you dropped it on a car that's now only worth $40,000 or $35,000, depending how far along you are with it. You could have had that cash available. So now what that tells me is you made a stupid financial decision. You're an idiot. So flexing on the fact that you dropped 50 grand in cash on a car, that's not a flex. That's just showing you your financial ignorance. Now forget about the disasters or the injuries or whatever. You could have saved that $50,000 and invested it in something that actually made you money. Real estate, stocks, mutual funds, whatever. You could have gotten with a financial advisor to help you place that $50,000 in something that could generate 7, 8, 10, 12% interest over the course of a year. That's huge. Instead, you dropped it into a depreciating liability, drove it off the lot, immediately cut $7,000 off the value of that car, and through the course of the loan, dropped incrementally every single year. So, again, not flexing, spending $50,000 in cash on a vehicle. You are showing us all your financial ignorance. And then when you get in there and you try to bash and berate people for financing the vehicle, you just make yourself even look more dumb, because the people that financed at low interest rates saved that capital, saved that liquid cash in their bank, or invested it, or, set themselves up for, to handle situations that may come along that are unpredictable. Because like I said, for a vast majority of people out there, $50,000 just to leave your bank account is a huge chunk of change. And I would argue that a majority of families out there don't have just 50 grand just to throw at a vehicle. So again, like I said, there's a lot to be said about not owing anyone anything. I love, paying off a credit card or whatever. I can't even stand having $500 on a credit card. It drives me crazy and gives me heart palpitations. I don't like to owe anyone anything. But dropping cash on a car, on a depreciating liability, makes absolutely zero sense. I don't care, like I said, how much money you have available, how much disposable income you have. If interest rates are under 5%, it's not even a question. Put as little down payment as possible, stretch that loan out as long as possible to keep the payments down, and save your liquid, save your cash. It doesn't make any sense to waste it away and just throw it all in one lump sum on something that's going to lose value immediately. Obviously, I would say not to get yourself in a crazy financial situation or hardship, or really stretch yourself thin, because that does happen from time to time. Although you can get approval for a loan, interest rate might be a little high, your payments might be right at the edge of what you can afford, and that leaves you in a situation to where you can't pay a bill, or if an accident happens, now you're stuck with a car you can't dump off that's worth less than what you owe on it, and that can be tough as well. So like I said, there's a lot to be said for not owing anybody anything, but in general, when money is cheap, paying cash on something that's going to lose value just doesn't make any sense. I know there are people out there with varying opinions. There always are, and I'd love to hear your feedback one way or another down in the comment section below. I'm sure a bunch of you agree with me, and I'm sure some of you disagree, and you'd be wrong, but I'd still like to hear from you down in the comments below. So let me know your thoughts on financing or paying cash for a vehicle, particularly in the case of a Q50. you know, if it's $5, $6, $7, $8, $10,000, you know, it's still a lot of money, but you can justify paying cash for that. It doesn't, you know, it's neither here nor there. But that's why I said $15,000 and more. We got to think a little bit differently. I really appreciate you guys watching. As always, I appreciate the continued support onward and upward for the channel, and I wish you guys onward and upward as well. Big things to come for all of us. 2022 is going to be a good year. Thank you guys very much for watching. I appreciate it. We'll see you in the next one.